Volatility strikes again, but this time investors welcomed the wild ride on Wall Street. Markets skyrocketed in the last 30 minutes of trading Tuesday, up nearly 900 points.
The way I look at it is there were an awful lot of bargain hunters who just thought that today was the day to push share prices higher.
The Dow Jones closed up 889 points at 9,065, while the S&P 500 index rose about 11%, with the Dow closing up 92 points at 941. The Nasdaq also closed up 143 points at 1,649. As astounding as the last hour jump was, many are scratching their heads wondering what happened.
One reason that they were looking to be fairly optimistic is ahead of tomorrow's FOMC meeting, at which they expect the Fed to cut interest rates by another 50 basis points.
Economists aren't drawing too much out of today's market spurt. They're more focused on the long term. More sobering news came out Tuesday indicating consumer confidence is at an all-time low, while home prices show their worst decline since August of last year.
Home prices are declining. S&P forecasts that home prices probably won't stop declining until the first half of 2009.
Investors now turn their attention to tomorrow's interest rate cut. They hope the Fed's action will have a lasting impact.
Lately, since the Fed started cutting, it really hasn't done much. It's been overshadowed by either the credit markets, which are loosening up, by the way, or the recession. And the recession seems to be expanding.
Whether it's a half-point or quarter-point cut, that decision will be announced at the conclusion of the Fed's two-day meeting. In New York, Bonnie Ghosh, The Associated Press.